Hey everybody, welcome to this week's Middle Class Investor. This is Seth Martin, your host, looking at a chart of the S&P 500 index. And you can see here we had another up week. That makes, what is that? 1, 2, 3, 4, 5 weeks in a row. And really 8, because these weeks were just kind of flat. So market's definitely in an area of the trend that's strong, and but that is winding down. So this right here, this is the latest little pattern right here, and so I think we got a little bit more. We got maybe another pullback, and then another little slide high, and then we should see something more dramatic that'll take us, probably down in here to this, maybe all the way over here. It's hard to know how long it'll last, but to the other side of the channel. So we could get something that could last this long, or we could get something that, hits the channel a little quicker. Either way, it's going to be above this line right here. So we could have something hits this a little quicker, something a little bit more abrupt, or something more complex, like a triangle. In other words, let me delete some of this and I'll show you what I mean. You could get something that looks like, like this, and then 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 finally a breakout back up to the channel up here. So let's see what that is. That's this junction of kind of where these two channels come together. So let's see where that is. That's around 2400 or so, 2425 on the S&P 500. So let's say next week you might get a little another little thrust up, and then probably a pullback, and then maybe the following week to new highs again, and then a more dramatic sell-off. That's kind of, but we should see a sell-off that looks similar to this one right here in time and price. So you can see this one took, it went from here and it ended here. Okay, so that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks. So, 2 months, 2.5 months, and it pulled back from the top of the channel to the bottom of the channel. So what we're looking for over here, or what we should be looking for, what we will be looking for, what I'll be looking for, let's say it that way, because I'm not sure what you'll be looking for. But we're looking for something that's going to be 10 weeks and pull back to the other side of the channel. Whoops. Excuse me. So maybe something like, that. Put it in the middle. Something like that, which effectively could look like this. Right? Just like this one looked over here. See, it's coming down, up, down. Zoom on that one and just draw that one. Outline that so you can see it. When the market pulls back, it tends to pull back in this kind of a zigzaggy way, like so. So look, we're going to look for something very similar to this over here. Boom, boom, boom. To this area of the channel. Now I got this blue line here because that's a place where the market might pull back to. It might pull back a little deeper here. There's no way to know. We'll just have to wait and see. All right, let's look at the VIX real quick. The VIX is low, still low. Pull back even a little lower this week, it's just amazing actually. Which makes sense because we had some down days in there. Even though the week was up, we had some down days. And as the market goes up, the VIX pulls back. So we had a slightly Um, the week was up more than this, but then the VIX is showing down. But um, generally speaking, you just want to see that the VIX is moving in the opposite direction of the market. So VIX is still very low. It's been holding above this little trend line. All the trend lines and stuff like that don't mean as much in the VIX. More like ranges. This range, as the VIX stays below this range, which I think it's likely to continue to do for at least another week, next week, and then maybe the week after that, we might see the VIX get up into this area or even higher. Okay, so let's look at treasuries. Treasuries, I think I've been wrong in treasuries so far, or not wrong, but just in the pattern that's playing out. But you can see here the 13-week treasury still remains high and is drifting upwards. So the Fed, I would say, is going to continue to look at raising rates. If they don't raise them the next time, it'll be some other time. But as this starts to move again, the Fed's going to raise rates. No doubt about it. Okay, let's look at the 10-year. That's the one I really want to look at. So when I say I've been wrong about the 10-year, I thought this was going to pull back pretty deep in here. It looks like it's more of like a triangle type situation. Although this doesn't really look, maybe it's a descending triangle. So it's kind of tightening up, and then we might get a drop down into this area. I don't know, but it looks like it wants to make another high. Like this is some sort of like fourth wave triangle is what it's starting to look like to me. And so whether it gets any lower here or not, I don't know, but I think what's likely to happen is we're likely to see yields, whoops, sorry about that. Yields are likely to rise before going lower again, I think. I was thinking that they were going to come down here, but I think really what's happening here is we got some sort of triangle going, and we should see yields pop up to here and then pull back. So could see yields make a little bit higher high, which will probably make the market nervous, probably involve some sort of sell-off, which then will drop yields as people start moving into bonds when the market starts to sell off. So I hope that's not too confusing. Again, this is all one. I guess another way to say it is this is all one trend here. This is all the same trend right here. Okay, and then the part that's going to come after this. Whereas I thought the trend was complete here, and we get a pullback, pretty deep pullback like into here, and then resume the trend. But I don't think that's what's happening now yet. I think this trend is not finished. We're going to make a slightly new high, maybe around here, around 2.7, 2.75 even, and then pull back. Start to pull back like so. Okay? Hope that's not too confusing. I'm not trying to confuse you. But that is distinct. That's different than what I was talking about before. I was talking about looking for this pullback, this to pull back into here, and I think it still will pull back into here, but not before it goes higher. I think it's going to go higher first and then pull back into here. All right. Hope I made that clear. We'll look real quick at Germany and Japan and the United Kingdom. Germany, again, this looks very weak to me. I don't know if Japan's top is already in. Certainly, if it's not in, we should see the market top in this area. But it's not clear as of yet what it wants to do. The Japanese market, though, clearly looks like it wants to go into this area. And then maybe it tops. We'll just have to watch and see, because this looks like a kind of a wave 4 with a 5 and then another 4 and a 5. That's could be wrapping up here. The UK, again, we broke out of this downtrend, but this whole move here just doesn't look like it's got any legs, which may mean this is more counter trend. So you might see the UK move up into this 34 area and then start to roll over and go back. Basically the U.S. market is like the last, market in the whole world that seems to be showing, some upward mobility. So with that, let's look at the dollar real quick. So the U.S. dollar has been, right through here was really, hot. I mean, a lot of people piling into the dollar. It was a little bit, this whole move here, this whole sideways move kind of muted things in the dollar, but it's clear that the dollar, it's clear to me anyway, the dollar wants to make a new high, probably around this 105 area, and then we should see the dollar reverse and start coming this way. And probably at least retest these lows down here. So you're going to see a pretty big sell-off in the dollar. Should correspond with a rise in the euro, which we can go look at the euro right now. The euro, the euro is a little bit, I don't know, man. The euro, it's hard to say. It definitely wants to go lower, but I don't know if it wants to go lower yet. So there's if I pull up let me get out of this real quick. Let me go to a daily chart and show you what I'm talking about. Looks like the euro, or let me say this, it's hard to see whether the euro, man, I cannot get this thing to stick. There it goes. Okay, it's hard to see whether the euro wants to come up to here and then roll over, or if it wants to maybe go marginally higher, not make a new high, and then roll over. If I was looking at odds, like odds favoring type of situation, I would say the euro is probably likely to go here to this 107 area, slightly higher than this high, and then roll back over and start heading this way. And ultimately, I think the euro will make a new low. Of course, if you're trading Forex, some of these moves can be substantial. So you just have to make sure your risk is well defined. I don't think it's likely that the euro is going to exceed this previous box. I think that box, in other words, I think this has already kind of made its first move down, and this is its first retest. And so we're somewhere in the third wave down. I just don't know if there's going to be another little short up here or not. I'm going to watch this carefully because I think this move down could be similar to this one. It could be very rapid. You could make money very quickly through here. So I'm watching it very closely. Crude oil is confusing to me. It's been almost trading sideways. You can see it's been here in this gunk, for a while now, and it doesn't look like. Whoops. There we go. That's what I wanted to do. It's just been trading kind of in this range right through here, and it almost looks like it's waiting for something. This could be kind of the last kind of back and forth before we start going lower. It's just right now, I think you need some evidence. I would say that you need to see oil, break below, probably this area right in here. I mean, if oil's not going to break below this area right here, I don't know that I would short it. And I also don't know that I would be long oil. I mean, I just don't think there's anything to do with oil as long as it's sitting right here where it's sitting. So I would say maybe below 51.5, you start looking to short oil. But where it is right now, I don't think there's anything to do. I think you just watch it and wait for a better opportunity. This is too messy and choppy to really see what's going on there. Let's see. There's some other currencies like the British pound, yen, the U.S. dollar, yen. I don't think the yen is through. I mean, it had this huge move, but I don't think it's through yet. So I think we're going to see some more movement in the yen. I think there's just a lot of monetary stuff going on over there. It's going to really make the yen move a lot. So I guess that's it for this week. I would be tightening up stops. If you're in bond funds, maybe wait till that yield is a little higher. I'm sorry, wait till the yield comes in a little lower, which we should get a move lower in bonds or higher in bonds, lower in yields. And then when the yield pulls back a little bit, that's maybe where I would look to offload some bond funds. But you've got some time there. I don't think that's something you need to do next week, but certainly in the next 3 months, 2 or 3 months, you should probably be looking to do that. All right. I can't think of anything else. If you have any questions or you want to make some comments about the show or about what I'm saying or more information on some particular chart or something, just respond in the comments section of the YouTube channel. Also, I'm starting to post probably a little bit more frequently. I posted a couple of articles last week on Twitter at the Middle Class Investor, which is at Investor Class if you're interested in following that. And otherwise, I'll be back next week and we'll talk more about these markets. Hopefully they'll give us a little bit more clarity in the oil market and also in the euro by next week. All right, everybody, take care. Thanks for stopping in. Bye-bye.